Hello, good evening. How is everybody tonight?
Not too bad. How about you?
Doing all right. Welcome, Jay, Mike, Ryan. Give it
You're
just
here. Me
couple
too.
seconds.
Definitely.
I'm actually doing a meeting too, so not a meeting, but we'll get together on trade.
Oh.
Hello, Jay.
Hey, Jay, mute it up, man.
I server muted you, Jay, just in case you're wondering. You had a hot mic there. All right. I have an interesting topic tonight. I don't think we've ever covered it, actually. Yeah, it'll be fun to kind of lay this out for folks. So we've got, well, I guess first and foremost, as always, sorry, I'm jumping ahead of myself. As far as today's trading went, does anybody have questions pertaining to what happened today? So we'll start there.
I wasn't in the room, but man, when I look back, that ES rubber band counter trend was awesome. You had a miner has to hold over an NQ that hit almost to the tick. I was like, dang, I missed out.
Yeah, and then we had two support levels on both NQ and ES. I'd given them, well enough ahead of time. But you had option A or option B, because the market could have taken it from there or there. Obviously, they chose the 96 area.
Yeah, just a little constructive. I had no idea what those lines actually meant. I just see that they worked. So there was no text next to them.
That's true. I didn't. That's true. I was just talking out loud in the room and letting people know before, because it was getting close to about 11. I think it was about 11:15 or so. Yep. Yeah, that's my fault. I should have labeled it for Chartcast. Absolutely. Little nuances I don't think about all the time. All right. Well, I'll do that going forward and make sure I put a support there or something. All right. So anyhow, back to the thing. Anybody got any questions from today's trading? Anything that you understood well and got, or anything you just misunderstood, or anything at all? Nope. All right. And we're going to move on to really an interesting topic tonight. So I've never covered this, and I'll start by talking about some of the stuff that we already know. I'm just going to blow up the ES here and get the NQ off the chart for now, because we're just using it for examples. So what we talk about quite frequently are things like pass to holds, resistance, supports, targets, rubber bands, decision points. Okay. Those we go to great length to make sure that people understand really where the story is as it pertains to that particular move at that particular moment. So again, I'm not going to focus too much on this, but very quick recap. So targets are in essence not only where the market is going, but also where it is potentially going to stop. Okay. And then the question becomes what is out ahead of it or beyond it to let us know or kind of clue us in that, it may not be stopping there, or that if it is going to stop within a relatively short time, how much further could we go, et cetera. But that's really what the targets are. And then, of course, if you get a blow through. So today's actually pretty phenomenal in the sense that you got really all three of them played out in a way that helps you understand that we're not guessing, right? We're always trying to interact with the market as it pertains as precisely to what they're generating as we can get our hands on. So here, start of the day, I'll zoom in a little bit. There we go. So start of the day, we hit a rubber band and never really got above that. Okay. The only thing that was above this at all was a miner has to hold as we were kind of making this way up. But again, I'm just using this as an example to show you, like, here's how it works. So hit the rubber band, never closed, never solidified above. broke back through the decision point that got us up there. So it's right here. So it tells you that move as it pertains to those targets. And again, it is specific, right? It's specific to those numbers, those values, those targets. They're no longer going to play a role in this, next series, whatever that series happens to be. And then here, same thing, targets and a rubber band that got blown through, and then of course revisited right here. So again, another prime example. You got this huge volume candle that pushed through. There's no real need to panic necessarily, because this is what they do, right? They came down here and then they come back, revisit it, and they come back again. And yes, this was my bad. It was supposed to have been labeled as a support, and then last, of course, was the has to hold below that. But either way, here's this one, and then third and final was the huge move up. So as we'd said in the room, if this has to hold holds down here, then they're shooting for targets all the way up here. So we did achieve that. Obviously, by the close of the day, we finally got to target one. And then I said, be aware, like this whole area right here is pretty severe resistance base. So as you can see, like, look what happened, right? Not a big surprise that we're struggling so badly in this area because it is a huge resistance zone. And I had said as much, like, unfortunately, I wish that they would give it a little more precise number. However, they simply didn't. And then after this populated, I had kind of made like a little side comment. I was like, oh, well, that's actually really helpful because at least we now know that the resistance is likely going to come in more towards the top of this band rather than the bottom of the band, because they almost never, I can't say never, but they almost never throw a target in the middle of a resistance band like this, and not actually achieve it. Now, same thing, like let's assume that target was down closer to the bottom, then same story. Like you don't have to take it all the way up into the resistance band most of the time. But nevertheless, they did hit this target. So again, I'm just laying this out real quickly before I get into the actual topic. We got to see in one day pretty much all the different types of ways that not only do they get to target, but how they use target and what it means when they start reversing and going the other direction. So just kind of, it was a fun day for that. I will say at the start of the day, I didn't think we were going to do anything. It was a pretty lame first couple hours of trading. But finally, we did get our support and ended up being a phenomenal day. So that being said, I think we've covered that at length, right? So we understand things like, again, as to holes and supports and rubber bands and so forth. What we don't really talk about much are the periods of the day where it's the unknown. So can anybody guess, based on the stuff that we lay out day in and day out, where does the unknown come into play? And then we just kind of give the advice of like sitting on your hands and not doing a lot, because the market is basically into a period where it has to now, redecide whatever it's going to do next. Anybody got a clue, an idea? I see Matthew is typing. We'll see what he says. I got $10 on Matthew. Between rubber band and support. Not necessarily, no. I guess it depends on what you mean by that. That's kind of a vague comment. Do you got your mic working, or do you have to type? Okay. All right. I'm not going to keep everybody in suspense. So, on a very big move, like let's just take this one here. This isn't like a giant move, but it's a pretty sizable one. That's from support all the way to rubber band. That's 90 points. So that's a pretty darn good move. Let's just make the assumption. Let's say overnight here we end up making it to the rubber band, okay, and then it starts falling, getting past target 2 and target 1. Suddenly, guess what? We're into the unknown. So what they've done, right, is they've set out a plan, a projection, and they've accomplished it. And they've accomplished all of it. Okay. And they don't necessarily have to get to the rubber band. Okay. So I'm not necessarily saying that. They can stop here at the full projection in this story that we're trying to communicate today. They could stop here, but the same thing is true. If they start falling back down and they start losing decision points and so forth and so on, they just kind of keep collapsing. Suddenly you're into this unknown. And this is where I usually try to warn people that it's not worth guessing. Trying to guess as to where the market is going to stop exactly is just not worth it. So I wanted to cover this topic because I was getting some direct messages from folks, and they're like, "Well, what about this and what about that?" And I was like, "You're just guessing. You're literally guessing. I don't know the answer. The market will give it to us eventually. Okay. And you just got to be patient in those periods in time. So if you've ever caught one of these runs where you're just like, you're up and up and up, and it starts hitting first target, second target, maybe it stops somewhere between second target and rubber band, just never gets there, and it just starts falling apart, right? That's the time. And this is really the only thing I'm trying to like emphasize on this phone call, this training tonight, is that that's the period that you just don't do anything. It's not to say the market's not going to move and that's not going to potentially make money, but the real question still becomes, how much further down are we going to go, or how much further up are we going to go? So here's a great example. We had this one laid out from the other day on Friday. So we had mentioned, so here's all of our targets, right? And we hit pretty much, yeah. So we started the day off. We caught all these on the first series. We caught target one on the second series, and then this one. This was the guy. This was the one that was going to be somewhat in question. So if they blew through this thing and then they were able to achieve, like, again, just one target after another and just keep on going, that was one thing. That was one possibility, because this is such a big deal. Like, getting here at all was such a big deal that it was really unknown. Like, what are they going to do? And it's the same thing. So we've made this huge fall down, right? We've achieved target 1, 2, 3, 4. And then again, I told you just treat this as a rubber band. So that's target 5. So you got 5 targets that have been achieved, and they're pretty major. Like, this was not an insignificant drop, right? So they've achieved all these targets, and then here we go. We've started to turn, and it comes back and revisits rubber band. Big shocker, right? Okay, because that's what it does. Like I told you, treat it like a rubber band. This is how rubber bands work. They always, not always, but again, high probability. High probabilities they come back and they revisit them, whether they blast to the downside and revisit, or they go to the upside and they revisit. Nevertheless, they very often revisit the rubber bands. So here we go. As this thing is climbing, right? I had no clue, not the first inkling, that they were going to recover the entirety of that day and then make the market positive like 7 points to end the day. So that's what I kind of wanted to just highlight this evening, because somebody had direct messaged me about that. They're like, "Oh my gosh, the thing went up like 100 points." I'm like, "Yeah, it sure did." And I didn't catch it, right? Like that's a huge move, but the market will eventually tell us, and it didn't really matter too much. We were pretty much at the end of the trading day anyway, but the market will tell you, and you'll just do the next thing. So again, it's not so much, going back over to this one over here. It doesn't pertain necessarily to these little moves. Again, there's micro moves and there's macro moves. What we've seen over the last 2 trading days, the Friday and today, Monday, we have seen the market engulfed in 2 huge macro moves. Okay. So you're only going to catch so much of it. Let's just be honest. Like, nobody here is holding any number of contracts for 150 points in a single direction, at least none that I'm aware of. Nobody who's talked to me about it. So not to mention that's a swing trade thing. You'd have to not only hold overnight in this case, you would have had to have held over the weekend. Not necessarily the best idea unless you are very versed in swing trading. So that being said, the macro moves is what this topic is about tonight. It's when the market has made some very long running macro position, right? They're doing true value change. They're actually changing the true value of the market at large, and they're making a huge macro move. And just like we saw here between Friday and Monday, just because they made some huge macro move to the downside does not necessarily mean they can't recover all of it, as we, of course, saw today. So what are we looking for in the macros is that when you reach those huge milestones and the market's made some very big price change, don't do a lot basically at that point. Like if you want to counter trend trade the rubber band, again, it's a valid trade, totally fine. But we always say, and I'm gonna probably forever say, that all you're technically aiming for are the two previous targets. And if you're still holding contracts, great. You can hold some for the decision point that got us there. Okay. And then if you still happen to be holding some, you can't, just don't do anything. Just sit there and listen and wait. If it just so happens that that's you and you counter trend trade a rubber band, because again, this is what I'm trying to get across. Not dissimilar to this morning's price action, right? We hit the rubber band that we called out. And what did the market do? Came back and tested target 2, target 1, even tested pretty close, didn't quite get there. Tried to test the decision point, went right back and then down and back. And it just didn't go anywhere. But the fact of the matter is, if you can just see that, just see this small area here in sort of a blown up macro move, it's the same thing and they're doing the same stuff. Only here, the risk to reward is much better, right? If I were to counter trend trade somewhere up here, I think it's 8. I think the number is 87. If I try to counter trend 87 in the attempts to get to 74, well, it's a 13-point move. So one, you better be willing to risk more, right? Because you're trying to go for 13 points. You can't be squeamish and getting out after like a point or two. You may have to give that a few points and just, again, it's just a risk reward thing. But I mean, nevertheless, that's a 4-to-1. That's pretty good. Let's just get to first target. If you can hold it even further down to 62, now you're talking about a 10-to-1 trading ratio. That's really good profit. So that being said, it's the same deal, but after you get past these targets, and if it just so happens to get past the decision point, then there won't be anything to say. Okay, you just have to wait. You just have to sit back, put your hands under your butt, and just wait if you happen to still be holding. I wanted to just cover that really quickly, just so if people understand, like, market just did a big thing, right? It made a huge macro move. Price change has changed, and we are now in like this area where anything goes. They could just, again, kind of like what they did here on Monday, they could just flip it and just keep going, right? Okay, so what do we know as traders here in this room? What are we watching for? We're watching for the next scenario. And in this case, we had the first one come up first thing this morning. Here's the first scenario. Can they get through the first scenario? No, they couldn't. Okay. They wanted to test support first. So be it. Now here we are in the, after hours. And have they successfully made it all the way to and through this upper scenario? No, they haven't. So this is all you're waiting for. So I'm just giving this example. Let's assume you were that guy for a moment who on Friday, when that thing hit the 665 rubber band down there, and you're sitting there thinking the macro move, right? You're thinking this thing's going to go up 100 points. What would you be willing to risk, right, to hold a trade overnight and over the weekend to potentially get a 100-point move? It's probably pretty substantial. The thing would have to go against you probably 20, 25 points if you really are that committed to that move, right? Nevertheless, obviously it only went down, I don't know, 5 or 6 points, but still. Um, Here you are in the midst of that move. Again, I'm just giving a total hypothetical. But here you are, you're that guy who you held through it. You took profit according to the rules back, on Friday when it went back through the previous targets. And you took profit again when it went back through the decision point. And for whatever reason, you're still holding contracts. You could literally just sit on it all day today and have done nothing until the market gave us something that says, like, here's the breaking point. And what was that breaking point? It's right here. Has to hold. So you'd still be, even if it broke, right? And again, I'm totally making stuff up here just for fun, but hopefully it resonates and just gets the broader picture across. You got in at 665. Here you are at 67.85. So you're still up 110 points, and you've got your stop finally dragged up somewhere down here. You guys understand what I'm saying? Is like that's what it takes if you're trying to involve yourself in some of these massive macro moves, which again, we're trying to stick to intraday trading, things that are achievable with inside the day. And nicely enough, most of this was achievable within the day. Even if you didn't make it from support up to the first target, it doesn't matter. You're profitable. You got any part of this. It was a fantastic day. All right. Any questions on that? That was just the topic I got some questions on. So I was like, yeah, I've actually never covered that. Nothing? Nobody? Everybody's millionaires? Sweet. All right. Well, that was my topic for the night because we've covered everything else. But again, happy to cover more stuff. Happy to talk about and repeat anything needs to be repeated. If anybody has anything. How'd the day go? Anybody want to share or comment at all about how your day went?
Just I traded a bias that I had in the beginning. I went short twice, got stopped twice, so then I just waited until after 11 and then took one long trade. It was kind of a short run off of the core and left for the day. I'll come back tomorrow type of deal.
Okay. So you said you started your day off with a short bias.
Yeah, so I really tried to short and I got stopped twice. And so it was just.
Were you doing it from the rubber band? Doing it from the minor has
No,
to
I didn't
hold?
get it. I didn't let it get as high as rubber band. So I tried twice from second target, and I just timing was wrong. Like it should have worked, but it was just I was jumping quick in, and trying to get my trade over with, and one of those days. It was difficult, for me just because I'm not a patient person. So it's just a hard one.
Yeah, I'd said as much too. I'm like, today they tried some patience, like from 9:40 to 10, so a whole hour. We pretty much sat saying, what? There's no change. They haven't done anything. It's nothing to talk about. Well, Ryan, thank you for that.
Yeah, I wish I had better questions. I don't, yeah.
Well, I mean, because you can answer, like, I can already ask you. I know you're going to know the answer. Like on this run up, right? It's because we're talking, right? We're chatting here at like 9:20.
Yeah,
we're having a conversation all the way up to about 9:30 here. We've already listed. We posted that again. I'm just looking back at what was. So this was posted back at 6:45 in the morning. That there was a minor has to hold up here, and there's a decision point that we posted at 8:55 in the morning. So here you go. If at 9:30 you haven't entered a trade yet, and you've got like I'm kind of catering to the bias for a moment, okay?
Right.
If I'm going to cater to the bias, then it's always in threes. It's always in threes, and you know this. So what are the three options that you could have shorted from?
Yeah, so let me open up because I don't have that chart open. So let me open my chart so that I can see. Just move my computer over, and then I can.
I'm going to blow mine up a little bit too,
Yeah, it's hard to see yours. So I
just to get this morning session in here.
I'm looking at a different chart that doesn't have your targets on it, and
What?
I know. Taking a second to log into NT.
But you can see this, right? Or showing
I can.
it?
It's like a little. Yeah, I cannot.
It's on your phone or something. Okay.
No, it's on a computer, but I'm not that great. I got to get on a bigger screen.
Okay.
It's a little laptop screen.
So what we're going to highlight here as Ryan gets his thing going is it's almost always in threes. Your options are going to be in threes all the time. The number of exits that are possible, the number of entries that are possible, the number of counter trend trades that are possible. And if you just stick to those three, you're going to reduce a lot of stress because you can just mentally plan them out and say, I mean, you can literally, again, just stick limit orders up against these things and just say, look, and you know, if you've got a day where you've got a bias like Ryan's talking about, then, you know, at least you're sticking to a plan, if it nothing else.
There we go.
You get it?
Yeah.
All right. So here we go. So we're at 9:20. We're chatting and talking. So we're starting the day down here, and you're telling me you got a short bias. Okay, fine. Where are you? So again, we're starting at 9:30. Where are your three options that you can, again, short from that's considered a reasonable approach to the market? Let's put it that way.
Yeah, I should have looked at it closer than I did, but it's all right. And so the decision point, the
Yep. So right
16 to
here.
21. And so for me, I was aggressive going in much lower than that and got stopped out. And it was just one where I just, I don't know, just really saw that we were going to, pull down in my mind, and we weren't. So, and then the second area that I could have tried, which I looked at later but didn't, would have been the minor has to hold, but I didn't put
Yep.
anything there.
Yep.
And
Missed it by what? Probably missed it by 2 ticks. So that's reasonable. Because again, we don't try to enter at the number. Never, ever, ever. You're always trying to enter within, 3 at minimum 3. If you want to be a little more aggressive, you can do like 4 ticks, but at least 3 ticks out in front of something. Okay, so that's 1. That's 2. What's the third?
And then I was trying to be aggressive, so I was going in at the second target, and I, that was one where I could have. That was my second trade. I could have taken a profit on that. I ended up stopping out, and then of course we fell after that. So then I just waited, and then I took a trade at the 3M area. A trade paid me enough to just call it a day and come back tomorrow. But I should have waited for the rubber band, and then I could have just sat.
But the rubber band, yeah, I guess that's the point. I'm not here to shame anybody at all.
No.
It should just say, like, it's to kind of give people, again, that's overall arching theme is like the market works in threes. It works in triplets. I don't know why. It just does.
I'm here long enough to know better, but I just, we were going down. Like, hey, put this stuff on, make my money, go home.
And you're right. We were going down from the rubber band, and we did.
Exactly.
And we dropped 30, 40 points.
I know. I just
40
didn't wait
point
for
drop. Okay.
Yeah.
If you guys ever get yourself in that situation, okay, and kind of like Ryan, he's got a bias. I do too from time to time. Believe me. I sit there and scratch my head sometimes and go, how on earth did it not go the other direction? because sometimes it's mind-boggling. Either way, and you find yourself not entering. So let's say that you saw this because it's the decision point. It has yet to have been decided. So until it breaks, and again, look to your left. Look what happened right in this area, like for hours and hours and hours. For 5 hours, they just did this nonsense. So it was reasonable to expect that they were still not going to get through it. And they basically hit it. I think they missed it by a tick. So again, a reasonable trade. And then it dropped what? 7 points. Okay. I know that most of you would lose your mind if you could make 7 points a day. So there's no real excuse if you did short that thing. And I remember saying, take short profit to start the morning because there's just too much they're not fully decided on with, which again, I can just look to my left and realize that like they didn't go anywhere for 5 hours. So yeah, take short profit, okay, until something is decided. So yes, so let's say again, you've got a bias, but you don't get in here and you don't take that. As a thing drops away from you 4 or 5 points, this is where I'm talking about for people not to chase. And this is something that's extremely important, and it's got to be habit forming. You got to do it on your own. You got to recognize that the market doesn't usually run in a straight line. It has ups and downs, right? So if that thing starts crawling away from you, you just got to let it go, man, until it gives you something else that's of a significant, thing to lean on to. You got to let it go. So it sucks. I hate it myself, but I have found it's kept me out of so many bad trades. So now let's say you chose not to do anything here and it drops away from you. And then as it comes up another time, again, we've talked about this. When they start approaching the same level, usually again, here we go again, in threes, when they approach it the third time, the chances are getting far worse for it to counter trend at that point. It's getting pretty bad. Okay, it's not to say that it won't, and we've had those days again that they have done it. We've been in the room where they've had a single level, they've approached it 5 or 6 times, no joke, and they just don't break it. But usually it's that they've already made some other major decision. Like it's usually when they get on top of the decision point and they go to like say target one and they go back to decision and target one and back to decision. And they just do this for 3 hours. Okay. Well, that's a little different because they made the bigger picture decision, which was to get on top of it to begin with. And so, yes, that's a little different. But when they're approaching things like rubber bands or when they're approaching things like has to holds and supports, you can see this stuff. Like it's usually in look at this. Here's one, here's two. You probably even call that one 3 right there. So they approach these things and that's it. So that's kind of how it works. Anyhow, my point being is like you didn't do anything. If it drops away from you, just let it go. If it's going to go, it's going to go. Just don't chase it. Okay. And this comes up to the minor has to hold. Again, this is option 2 to short because I'm taking Ryan's approach here about having a short bias. Then you need to have again, you got to have a limit order if you're going to engage it this way. Again, I'm a little biased in the way that I enter the market. Everything is pretty much, here comes the train, it's rolling down the tracks at 100 miles an hour. I just step out in front of it and go, it's fine. I'm holding a stop sign. He'll stop for me. I promise. It's going to work. It's going to be fine. That's just kind of how I approach the market. But if you're not that guy and you don't have a limit order sitting there and it comes back to decision point, which it did, like right there, perfect. Like it zinged up, came right back to decision point, and you still did nothing. Don't chase it. Alternatively, like this probably should have been a clue, honestly, for most of us that like we just blew through the decision point and we just tagged the decision point again to the tick. And that was it. Boom, after that. So again, you have option 1 and again, I'm using Ryan's bias. Option 1 to short, option 2, option 3. Okay. And we did cover this actually in one of the training sessions. We were discussing it as a how did I phrase it? It's not that I'm endorsing it, if I remember kind of how I put it. I'm not endorsing that people counter trend trade targets 1 and 2. Okay. But if it is just in your blood, or better yet, it's more about your account size, it's more about your risk capacity, right? Or let's just say that, again, you're just going to counter trend it with like 1 micro, and you don't care if it goes from 30 all the way up to 39. Like, that's not going to affect you 1 iota. Like, whatever, it's 9 points on a micro. I could care less. So you're doing it from that mentality, you're doing it from that position. But if you're not, and you're trading any amount of size that's going to cause you to stress, because that's really what swing trading is more about. It's like trading so far down in your capacity that you don't care if it goes 10, 15, 20 points against you, so long as it doesn't break significant, barriers. But nevertheless, we covered this as a thing that kind of what you did, Ryan, which is like, I'm going to counter trend trade from here. Well, that means that you have already got to mentally prepare to go to here, okay, without any panic, zero panic, because you already thought about it and you said, I'm willing to do that. Okay. Okay. Then do it. If that's their trade, if that's your trade plan, then go for it. Okay. It's not to say you will not be correct. You might be. But again, I recommend to everybody in the room, wait for the rubber band. The rubber band is a phenomenal. I mean, how many times does it happen? I don't even know. I could go back and count like 1,000 of them. The rubber band is a great place, even if it only made it to targets 2 and targets 1. Again, it's a shorter, scenario, so there's less to get. Obviously, we're getting what, 33. You're getting 3 and 6 points respectively. So not awesome, in my opinion, but it does still fall in the window of trades that I consider reasonable. Because again, there's got to be at least 5 points out in the direction that you're thinking for you to even click enter. For you to enter anything, there's got to be at least 5 points sitting out there to possibly get to. So in this case, that would have qualified because again, it was 6 points to target 1, and then of course even further, 10 points or more, 12 points to get down to the decision point. So again, it's a valid one. Obviously, we all have hindsight today, as we do every day. You can always look back at these things, but I mean, it should only take, I don't know, a month, we'll call it, of somebody just recognizing this pattern that, again, the market just does. This is the pattern that they do. Hit rubber band. If they can't get the rubber band, they go back. If they blow through rubber band, they come back and they go to the next lower target, etc. Today was a little different because they were actually trying to get to the support levels, which were down, of course, here and here. And they just took, it wasn't even aggressive. I remember we said it in the day. What was it? I had it posted. There was a slightly more aggressive if you wanted to try it. Let me find it here. Where was that guy? Oh, 807. That's right. 807. So as we were falling, 807. So that's like down here. Nearly got to it to the tick. So we called this one out. It was a verbal call out. It was just it was happening very quickly. I said, look, even if it gets past the rubber band, if we don't get past the 807, so that's going to be the most aggressive. So that would be the most aggressive for trying to capture a significant upside. We didn't have the official targets yet. Obviously, they came in a little bit later. These guys, but 807. So even if you waited for just this one, there's 807. Same thing. You had a limit order sitting there waiting. Thing bounced back. I had to look back and see if it went. I think it went back all the way to second target. So even that, it was a 7-point move. So again, you can take these little chunks out of the market so long as you're not hesitating too much. And again, you've got your trade plan in mind. But again, same deal. Like depends on your risk tolerance. You could still have counter trend traded this rubber band here at 810. We verbally called out 807, but even if it was 810 and you're like that's only 3 points, I'm trading down significantly. I'm not trading a lot of size right now. I can totally handle a 3 point wick. It's not going to affect me emotionally at all. And then it came back up and tagged there. It's the same set of rules though, right? So that of course becomes the question of like, is that worth the trade? Am I going to counter trend this 10 7 5 11 just to get back to 14? So because again, if you got to front run it a little bit on the way in, front run it a little bit on the way out, and you're giving up a point to a point and a half already just on the entries and exits. I don't know. I wouldn't do it again. I personally tried not to counter trend trade a lot of these shorter scenarios just because again it's the same set of problems. Is that even if it does counter trend, you got to play by the rules. You got to take profit there and there until it ultimately decides to do something else. So those are harder for me personally because I'm just doing the risk reward based on it. I would rather the thing do this right, blow through all the targets, hit their band, putter out, come back down, break the decision point. And once it broke the decision point here at 10:45, I'm like, cool, now I'll short because the opportunity is better, right? Like going from POC to here, right? Like that's 8 points. And so again, it's just this constantly running thing in my head of, is there at least 5 points to get to the first thing? If there's not, then I'm not usually doing anything, just kind of hanging out. So I appreciate it, Ryan. Thanks for sharing, man.
Of course, I wish it was like, some victorious story where I traded so well, but no, it was just, two stop outs and one winner. Traded poorly.
It's okay. It's funny though, listening to you though, because you got way more discipline than you used to.
That's the truth. That is very true. Yeah,
You got way more discipline. Yep. You would have go back 6 months. You would have front run that thing from like the middle of nothing.
Yeah.
We wouldn't have even gotten to a target, and there's Ryan shorting. I'm like, what are you doing?
I marketed in. It's happening. Yeah, I didn't even limit.
We're literally in the middle of like we're between decision point and the first target. There's nothing to do here. You just hang out, do nothing. Still, if you're not in, you're not in. All right. Who else? Anybody? I went ahead and preemptively had tacos tonight to warm my stomach up for tomorrow. And then as a reminder, since you guys are in the room, I've already posted it in the core trade room discussion, but I'd had a trip that kind of came up unexpectedly, so I won't be here at all Wednesday. So just as a heads up, Bob, are you gonna still be here? Have the room open?
Yeah, I'll open the room, and as long as you have some stuff on Chartcast, I'll show that as well.
I'll do my best. I mean, obviously, it's whatever the market has, I'll put it up there.
Yeah. At least if I'm showing it, people will know that they're not missing something from their Chartcast. It'll match mine, and they'll know that that's just whatever we got that day.
Yep. I can already guarantee it's going to be far flung, kind of like, because again, like if I'm not sitting here intraday and you're watching this thing do this, I mean, how many times did we have to delete things today, right? Because like, oh, all right, they broke that scenario, that's deleted. Oh, they broke that thing, that's deleted. So if I'm not here, I'm just going to give you guys like the really far out projections for, again, it's really dependent upon what's there. I don't know what's going to happen tomorrow. So we'll see. Cool. Anybody else? If not, we can end it early. That's okay. Alrighty. If we got nothing else, then yeah, stick to it. We'll see you guys in the morning and
Yeah.
do it all over again.
A quick one, though.
Yeah.
I'm trying to understand, I know you have mentioned that big picture has to hold is mainly based on the, what did I say? Is in the chart. Sorry, I'm trying to get my thoughts correct. How much information, how significant is big picture has to hold in terms of the way we trade? Because, you said it can wipe maybe more than 10, 20 points. So how does it help us? What if, I'm trying to frame my question very well, but why do we have to know, why do you provide that information that there's a big picture has to hold here? Because knowing that this thing can whip about 10 points, why do we need that information? Because we are trading for the day. It's not a swing trading, like you said. We are not doing swing trading. So how? I'm sorry, I'm not
Yeah.
able.
So like,
I just joined the meeting.
so I'll
But
give you. It's not a big picture has to hold, but it's the same thing. It's because it's in. I'm just going to go back to Friday's thing. So this guy right here, right? It's kind of in the middle of nothing. I think we all agree. It's not part of any series. It's not a part of any core. It's actually below, gosh, everything is below the expected low, but it's kind of like hanging out down here. So I remember saying this on Friday, is that if you find yourself in any short position and you're coming down into this, it's fine to hold for target number 2, obviously, if you can get to target 1 in that series. But please, please, please do not negate taking profit here. Okay. So this is kind of why it's important a lot of times, is that you need to understand that if you hit, you can use this as a, like, matter of fact, let's just imagine for a moment, because it literally reacted, maybe not exactly like a big picture has to hold reacts, but close enough for this example, that if you can't get through this, so like a big picture, we say all the time that it can go through it quite a lot. It really depends on whether or not it very quickly recovers above and then it comes back and supports it, right? So that's why I want you to have that information so that you can mark your chart in such a way, however you want, right, that just really gets the point across that no matter, again, if I'm in a short, no matter what I'm doing, as this thing has made it, this little tiny bit further, you just acknowledge that, man, if we get back up on top of this thing, because again, a big picture would be very similar. The big picture has to hold. If it just comes through it by a little bit and we get back up on top of it pretty quick, maybe I'm just going to give up on this second target in total. I don't need to deal with it anymore because this is too big of a deal.
George, I'll explain how I'm using them differently, and you can tell me if I'm wrong, but it might also help answer the question. The regular has to hold. That's the one where I'm getting pretty confident about just, putting some limit orders around it. When I see you say big picture has to hold, I don't use a limit. I kind of wait on it really to show me what it's doing there. And until it closes back above, I don't even entertain going long. Now, maybe I'm not getting the best price because of that, but I'm also not having to withstand that 10, 15-point stop before I find out that it really wasn't holding. Is that
right?
Okay, or?
Yes, no, it's fantastic. As a matter of fact, you and I, in our videos we're doing, I think we even talked about that at some point and kind of laid it out. Like, if you're not really, if you're not acutely aware of big picture has to holds and you haven't been here in the room long enough, it's probably one of those ones you just stay away from. but your method's really good because, yeah, if it just pushed through it and just kept going and kept going, right? Like you're not sitting there going, "Oh my God, when's it going to stop?" You just like, "Oh, glad I didn't enter," right? But on the opposite end of it, yes, if it pushes through it by some degree and then recovers, you're absolutely right. Like the market's trying to tell you something. Like, hey, it's a big picture has to hold. It doesn't have to be perfect by any stretch of the imagination. And usually what I'm usually doing, Shush, on the big picture stuff, me personally, I'm looking for the market to give me other targets surrounding it. So again, that's why I said this one's a decent example. It's not exactly, but let's assume that this was a big picture. Chances are much higher if this was a big picture has told that they probably would have gone at least to target 2 first. Okay, so they would have actually made this move here at 12 o'clock. They probably would have come down, tagged this, and then if you're thinking about a counter, so that's what I would assume you're processing, right? Is if it's a has to hold and we're coming down into it, can I counter trend trade it? The answer is yes, of course you can. So when it's a big picture has to hold, I'm always looking at what has the market provided me in other targets that maybe are surrounding that theory. Matter of fact, we could use today's run up. Again, it's not a big picture has to hold, but it did work in a similar light that I'm explaining right now. So here we are. We laid this out at 9:45 in the morning. We knew that this whole zone here was just a big resistance zone for the market. And then when they popped this guy up, it's the same thing. You see what I'm saying, Shush? So let's imagine for a moment that was my big picture has to hold at 57.75. And if I'm sitting there thinking, has to hold. Okay, I'd like to counter trend trade that. All right, great. Then the market gives me this. My mind changes. Is really what happens. I'm like, oh, well, I won't counter trend trade from here, but I will counter trend trade from the first target. And save myself whatever that is, 6-7 points of grief as it maybe gets here, which it did, right? And then it drops. So does that make sense?
A little bit. I'm sorry I asked the question. I'm in England. I literally jump out of sleep to join the program. So I think the bottom line is what information does big picture give us and how do we use it? Seeing that we are just doing, day trading. Basically, that's the question. Yeah.
Yeah. So, okay. So knowing, and again, this one happened quickly, right? So between Friday and today, knowing that we went to 66.65 and we got such a severe reaction to go back up so quickly, you should have a bias in your head of what?
Okay.
Long. We should be looking for longs. So we're looking for a dip because again, I want the better price. So that's the micro move, right? Which is really what this move here from 10:35 down to 12 o'clock basically was. This was the micro move. And this is what I'm hopeful for. And I can't stand the days. It drives me nuts when you get a day that's chop, 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 chop like this, and it blows through a decision point and it blows through a band and it just goes. Because it doesn't give us an opportunity, in my view, that you get a safe, reliable, high quality entry. I can't stand those days. But I don't chase them anymore. I used to. I stopped chasing them. I just fold my computer up and I leave the room. I'm like, I'm done. Like if that thing takes off and it goes 25, 30 points away from us, I'm like, I'm not going to sit here and wait for it to maybe retrace 30 points. It's not going to do it. This was a pretty good day. Again, we got market slowed us down. So again, to your question, why do I care? I care because 66.65 had not only held down there really well as a rubber band and a big picture scenario, but it did it severely. So people recognizing that like there is a lot of buying happening in the market clearly, and it's not like somebody's opinion at this point. Like just look at what happened, right? Look back, look to your left. Holy crap, man! They just recovered an entire day's loss of over 100 points. That's a big deal for the ES. 100-point swing both down and up. Are you kidding me? That is a huge day. That is a lot of money pumped into the market.
I guess I need to think through that because I watched the video over the weekend on the has to hold, and I know when I turn on my computer, I look at the charts. Where is the market in reference to big picture resistance? Where I look at all that. But if it's if I have to engage the market, big picture has to hold, knowing that this thing can wick about 10 points. What does it tell me? What that's my chart.
Yeah. So do Bob's approach. It's a great approach.
Okay.
It really is. So if it's a big picture scenario, you don't have to step out in front of that one. Okay. You can just watch it. And if it, again, let's assume we're going down and we get a big picture has to hold below us. And it goes through it by 10 points. You could, and again, I'm only giving suggestions here, right? Like you got to figure out your own trading style. But I've seen Bob do this too, and I'm guilty. I do it as well. I'll as soon as it goes through the big picture has to hold, it gets far enough away from it, so it's 5, 6, 7, 8 points below. I'm happy to go ahead and put a market buy order, 1.5, 2 points above it. So that if it does return, like if it goes down, and again, I'm kind of making some assumptions, right? Like if there's no other targets, if there's just the middle of nothing, then there's nothing to really to counter trend trade off of. Okay. Does that make sense also?
A little bit. I'm still struggling with that thought.
Okay. Let me pull back. Yeah, I'm gonna pull back to that because it's a good example. Let me pull back to that rubber band here. So it's like this. This is what Bob was saying. I'm gonna do a little drawing here. I know you guys love it so much. So here we are. We're in this slide, right? And we're going to call this a big picture has to hold for the example here. So here's our big picture has to hold. And we see that we have to our left, we got targets here and here. So one, I don't have to think about this one, right? It's already going to be past that anyway.
Yeah.
Okay. So I don't really think about that one. But nevertheless, it's an important factor in this whole scenario too, because what happens if I recover above this price?
I go up to the next.
And where's it most likely trying to get back to?
So the rubber band up there. Oh, yeah.
No, the decision point.
Yes. Okay. Yeah. All right.
Yeah, the decision point of this scenario.
That's correct. Yeah.
Okay. So already again, it's not that I'm not counter trend trading here. I'm not saying that. I'm just putting it in my head with this scenario and every scenario that ever plays out. I'm always thinking about this, is that if we can only get to target 1, it's probably trying to get back to decision point. Or if we only get to target 2, it's probably trying to get back to target 1 and maybe decision point. Okay. Okay. So that's that. So then we introduce kind of another little tidbit in the middle of it. And we say, okay, in the middle of those targets, guys, we got a big picture has to hold here. So what Bob does is instead of wondering and thinking, which it's funny, it actually bounced pretty nicely. Yeah. Anyhow, instead of wondering, should I put a limit order here and maybe have to suffer all the way down to potentially that target? Like that hurts, right? That's a lot. It's a lot to deal with. Yeah, it's 20 points. I don't think anybody wants to go negative for 20 points just to figure out it.
Exactly my point, Bob. Exactly my point. It's a whole trade in itself. So
right. So instead of doing that at all, just watch it. This is what Bob is saying right here. So if it goes from here to here, which it did, and it went to here, right? This was nothing. This was literally nothing.
Okay.
This had no relevance to a core, to a target, to a nothing.
Okay.
All right, great. Maybe somebody else's indicator from some other somebody knew that why it stopped at 58 or 55. I have no clue why it stopped at 55. It was a nothing level. Okay.
Okay.
But to Bob's point, because of that, does he really want to suffer 10 points to find out that it's actually going to go another 10 points? Right? No, he doesn't. So he says, well, what if instead I just let it do whatever it's going to do? And then if I find that it has come back up above here, the decision point, or we're using it as a big picture has to hold. If it comes back up against our big picture has to hold point, this is what this is kind of what I do. I'll stick a limit buy order, like right up here. Because now I'm not really guessing. I'm still trying my best to interact with the market as close as I can to this level. Okay. And I know that if we can get down below it and back above it, then it's in all respects, it's supporting it. It's not actually breaking down. It's not falling apart.
Okay.
So you're kind of, again, we're trying our best to take the guesswork out of it. We don't want to guess. I'm just looking at what is fact. So what is fact? Fact is, I know it's a big picture has to hold. Okay. I don't want to step out in front of it. That's fine. Fact, I'm going to watch it go to wherever it goes. Because again, it could have gone to here, right? Or here, or here. It could have just gone to wherever is the point. So you're not engaging is the point. You're making the commitment to not engage at all until it gets back above it. Now, there's always a limit to how far that really should go, right? And we've said this a lot of times in the room too, is that fact of the matter is, had this thing run all the way to rubber band, well, then you didn't have to worry about it anyway, right? You just counter trend trade from here. And then I'll probably go back to here. So that's, that would have been a 50 point run just to go from rubber band to rubber band. But the best way, I think, again, I said this in the training, if you watch that video, if it's big picture, just stay out of them. Let the market tell you, what ultimately is it's going to do. So this is not a big deal for it to have gone down 10 points. It's big picture. That's fine. Like that's not a big deal for the market. For it to recover it and then come back and retest it almost to the tick. I mean, there's your clue right there.
Okay.
That's the best way to treat big picture. So you either try to capture it on the way back up and through, because it doesn't have to do this either, right? Like there's no rule that says it has to go here and then come back and test and then take off. There's no rule that says it has to do that. It did. It was super nice of it.
So from what you're saying, the chances of the big picture has to hold weaken the second time, it's not likely. I mean, I know there are no guarantees, but at least I know
like
the
this
big
one right
picture
here.
when you're getting there. When we're getting there, I know it can weak maybe more. Okay, go ahead.
That's why I put, it's just, again, you pick how you want to do this, but that's why I do this option.
Oh, okay.
I catch it on the way back up.
Okay.
That way, if this doesn't occur, I'm fine, right? Like I don't care. I don't need that to occur anymore. Matter of fact, I'd prefer it not occur. Okay. I'm already in. It's like, no, man, let's go. But then I just, again, if I got in here, right, I have to just commit to like what's next. Well, you just went back to target 1. here. So the rules are, got to take profit there, right? Okay. It went back to rubber band of the previous series. Again, this is all just price. Don't ignore it. It's just price. So you got to take profit here also. So even if I got in here, I've already taken profit once, twice. So I'm already out several contracts in the green. So as this thing comes back toward me, I still have to allow it some wiggle room near big picture. What kind of wiggle room? Again, that's more up to you, right? Like, what are you capable of giving? What are you willing to give?
Okay.
But if I entered with, 15 contracts on the way through, and I've paired out, say, 7 or 8 by the time we got here, and I'm already doing pretty well, I can take that same distance. So what, 67 to 81. So I can take a 13-point hit on the downside and still end up at break even. You understand?
Yes, sir.
Yeah. Obviously, I'm not going to, that's extreme. I wouldn't do that. I'd probably, at that point, I'd probably still have to give it 3 or 4 points, which again was plenty. And again, I know we have hindsight. That's super easy, but you still you got to figure some of that stuff out. Like, I got to give it some wiggle room still. I can't be so stringent that I put my break even right exactly where I got in. Then I feel like a dumbass. It wicks me out and then shoots the other direction. I'm like, oh man.
All right. Thank you so much. Again, I apologize. I just jumped out of sleep to
No,
join
you're
the program.
fine.
Just, I've been meaning
That's
to
a great
ask that
question.
question after the video. So,
Yep, that's a great question. Yeah, big picture, you got to be able to either scale way down in what you're going to trade and be able to handle some from sizable drawdown, or B, you look for the surroundings that are after the big picture. So in this particular case, it would have been here. So there you go, Ryan. Here's an opportunity for you to have actually put in a true counter trend trade at second target, and it had meaning. Why? Because we pushed through a big picture has to hold. So it changes the story, right? Like it completely alters why somebody would choose to counter trend trade a second target. Well, now it makes sense because you're looking for that thing to get back to it test it at least, right? And then see if it recovers quickly. That's why it's
thank you.
important to know this stuff.
Thank you
If you
much.
don't know where those levels, no problem. If you don't know where those levels are, then it makes it really, really difficult to understand. Like, why did the market just bounce 170 points?
Oh, okay. Thank you. That makes sense. More.
Mm-hmm. Yep.
Thank you.
Yep.
So in effect, bouncing from the big picture tells me how far the market is going. I mean, likely to go. Is that correct?
Yeah, because big picture, kind of like minor has to hold. Minor has to hold is directly in relationship to the size of the. And again, don't that gets a little confusing. So minor has to hold is always in reference to a fairly minor initial move. Okay. It's not to say that it can't go into another scenario, but it's just saying that right here, right now, because again, we only get to work with what we have in front of us, right? And the market is just filled with if thens. Well, the minor has to holds lead into that small scenario, right? That's just how it works. Now, if there happens to be another bigger scenario at play, like in the background on top of it, that's fine. That's wonderful, in fact, because we're already going in the trending direction. But it's got to break through the entirety, right, rubber band and all, of that move. So, like even this morning, if you notice, were there any further downside targets posted?
No.
Oh. Why? because there was no second scenario at play. The only thing they were trying to get to were either the has to hold or the support line.
Mhm. Yeah.
It's the same thing. Like, here's the minor has to hold. So I get it. We didn't touch it, but it's still true, right? Like, it's still factual. I don't like it any more than you like it, but it's still factual. Fact is, we did not, on this move up, we did not break 39. Didn't break it. There's nobody in the world who can't see that, right? And you're sitting there thinking, well, how do you trade that? Well, you either have limit orders sitting up here and just realize they never got picked up, right? Which I did, and they never got picked up. Okay. Or you bring your risk up and you try to counter trend trade the rubber band. So you got to bring your risk up 6 points. That's, again, it can be asking a lot, right? Like 6 points for most people is like all you want in the day. And you're like, man, you want me to go upside down potentially 6 points? Well, if you can't do it, then don't do it.
Okay.
I wish I could tell everyone, like, the market will 100% go to this number and it will turn and it will go 90 points the other way. Like, I wish I could do that.
Okay. All right. Awesome.
You sometimes got to
so
take a couple different stabs at it. Yep.
Thank you so much. I appreciate that, Josh.
Yeah, of course. Love it, Shush. Love it. What else? Jay, you doing okay?
It's a quick one. When are we expecting the video on the hurdles? I think, like you've always said, resistance, support has to hold are the major entry points, and sometimes hurdles based on the
Sometimes
location
hurdles.
of the
Yep.
hurdle, right?
Yep, exactly. Yep.
Yeah. So I think what I'm interested in, at what point, I mean, where is it when the hurdle is before the target or after the target? When does it become, you treat it like a has to hold? That's one of the challenges I have.
No, yeah, and again, like I said, I wish I had a crystal ball. I could tell you, like, it's only going to go to the hurdle and drop. I wish I knew that, but the hurdle, it's always in the trending direction of the market, and it's the last thing the market has to overcome, which is why I call it hurdle. It's the last thing it has to overcome. If it overcomes it, it's an absolute shoe-in that we're going to go to the first target at least. Like, there's no doubt the market's going to get to the first target. Second target, who knows? Third target, who knows? It's going to get to the first target.
Appreciate that. Thank you.
Mm-hmm. All right, folks. Good questions, good conversation. Love it. We'll see you guys in the morning.
Bet, George. See you then.